Good morning, everyone. I hope everyone doing very good. I'm Dr. Gokilavani from Department of Commerce UG, Kristu Jayanti College. Today, I'm delighted to present on this topic, Lease 116 Indian Accounting Standard and its disclosure in financial statement. So before we start the term, the lease meaning, we want to know the term lease agreement. A lease agreement is a contract between two people called lessor and lessee. And in this agreement, it defines the complete rights and responsibilities of both the parties. In that agreement, it will specify what is the rent amount, when is the payment scheduled, and what is the maintenance obligations, and finally, it will tell about the termination conditions. I would like to start with this image. So you can see the image of various shops. So it's a Trends, US Star. So from this image, what you all able to understand? One thing we can depict from this image is we can say that this Trends buildings are leased by the owner. So the lease organization is not having a particular building to start this shopping mall. So instead of that, what they have done it, they have taken a lease agreement with the company owners. So, and one more example I would like to give here. So if you see in the PPT, recently Mukesh Ambani, Reliance is agreed to develop a global economic hub in Navi Mumbai on 3,750 acres of land. If you think about this project, this is a project based on the to build a global economic hub under a 43 years of lease period. So they are not going to purchase the particular land, they are going to have a lease between the landowner and between the organization. So in this project, the Reliance Industries secured 3,715 acres to build a global economic hub. So this is a best case study or example which we can quote for the lease. So from this, I would like to tell you one thing. There are two parties are involved here. One is lessor and lessee. So the organization, the Reliance Industries, need to record this transaction in their financial statement, as well as the landowners also need to be reported in their financial statement. So that is what it plays an important role of lease and Indian Accounting Standard 116. So let's see the meaning of the term. Indian Accounting Standard 116 has defined the term lease as a contract. So it's a contract between two parties, and that agreement, that contract which conveys what is a right to use an asset. The underlying assets, let's take an example of a land or any building. It will be exchanged between two parties for a particular period of time in exchange for consideration. When they exchange their properties, there will be surely a consideration amount paid by the two parties. So there are already two peoples are involved. Lessor, that is a user or the tenants which they are using their particular underlying asset. And another party will be considered as a lessor. They will have to show under their financial statement lease liability reflecting future lease payments and what is a right of use asset. Now, let's see the objectives. Indian Accounting Standard number 116, the main objectives are followed here. I would like to list out into 3 points. One is set out the principles for the recognition, measurement, presentation and disclosure of lease. So when an organization deals with a particular transaction called lease, they need to set out a particular principles. The next objective is to ensure that lessee and lessor will provide a relevant information in a manner which will have a faithful represent those transactions. The final objective, this information will give us a huge impact and basis for the users of financial statement. Who will be using the financial statement? The investors. So the investors can able to assess the effect that lease have on the financial position and their financial performance, and also it shows the cash flows of an entity. Now, I have already mentioned that there are two parties are involved, lessor and lessee. Lessor means the party with the ownership of the asset, such as property or equipment. So in the previous example, those who have given their land as a lease agreement. So the landowners will be called as a lessor because they are the owner of the property, they are the owner of the asset. For a particular period of time, they are exchanging their properties for the certain number of consideration. Lessee, the property which they have borrowed a person will be called as a lessee. The party that borrows an asset from the lessor and with the main obligation to pay the interest, and absolutely they need to return the asset at the end of the contract term. So I hope you will understand what is the two different terms, two parties, those who are involved in the term lease 116. Now we are going to start with a disclosure. Whenever a party deals with lease agreement, any property exchanged, any property taken for a particular duration, the company need to disclose in their financial statement. So that is a very important for both the companies like lessee or lessor. First one, from the perspective of lessee, what are the main disclosures are required? There are 5 important points. In that first point is right of use assets. We know the meaning. What is meant by right of use assets? So whenever a building is taken for a lease period, or when a company is taken a particular vehicle for a lease, that particular asset will be called as a right of use asset. When the lessee is started to gain a right to use a particular property, they need to disclose certain informations. Where they will be investing in the particular information in their financial statement. Now, how it will be shown in the financial statement? The example I have given here, asset class. So whether it is an office building or a vehicles. What is the carrying amount for the particular duration? If it is 50 lakhs, and what will be the depreciation for the current year? So a certain percentage will be calculated as a depreciation. So this information need to be shown in their financial statement. That is the first and foremost disclosure in the perspective of lessee. The second disclosure is lease liabilities. So the lessee will be calculating, they will analyze the maturity analysis of a lease payment. Whether it can be a less than 1 year, if it is 1 to 5 years or more than 5 years. What will be the lease liability amount due to the other party? And if even any interest expenses are incurred, that amount also need to be shown in the particular financial statement. I have given a meaning. What is meant by lease liability? It is the present value of future lease payments a company have a duty or obligation to make under a lease agreement. So these are the liability of a company and it has to be shown like this. The third point, lease expenses recognized in profit and loss account. During the transaction or during the time of lease agreement, if any short-term lease expenses or if there is any variable lease payments which was not included in the lease liability, or even if an expenses which is related to the lease agreement need to be recorded in their profit and loss account. The fourth disclosure is cash flow disclosure. Cash flow statement which will depict that what is an amount goes out from the organization for the purpose of lease agreement. So the cash flow disclosure need to identify what is the principal amount and what is the interest payment which they have done it on the lease liability. So fourth disclosure is a very important for the perspective of lessee. The last additional disclosure, if there is any modifications happened in the lease agreement, or if there is any changes in the assumptions of a contract, this need to be shown in the financial statement. The last line is very important, subleases and sale and lease back transactions. It means Reliance Industries have taken that in land for a lease. Suppose if a certain number of area is not going to be used by them, then they have a right to give a sublease for any other person. So if any transactions are there regarding with subleases or lease back transactions also need to be shown in the additional disclosure. So these are the 5 important disclosures under the perspective of lessee. Now let's move on to the term disclosure from the perspective of lessor. Before seeing the lessor's disclosure, we need to be clear with the 2 terms, that is financial lease and operating lease. What is meant by financial lease? Example I have given it here, own in substance. So we have taken a particular building for a lease period. Installment wise, we are making a lump sum amount of money to the owner. At the end of the lease period, the particular building will belong to our company. That is what financial lease. We will make the purchase on the basis of installment. Operating lease means use and return, like how we have taken a rented house. Once our purpose is done or for a certain number of years, after that we need to return back the property to the particular owner. Until that we have a right to use and we can enjoy the particular property. I have given a differences between financial lease versus operating lease. Financial lease retains their ownership and it will get at the end of the lease period. But operating lease, lessor retains their ownership. There won't be any transaction of ownership from one person to other person. With regard to accounting treatment, asset and liabilities recorded in the balance sheet on the purpose of financial lease. If you take the operating lease, it will be recorded only in the profit and loss account. With regard to depreciation and interest, lessee records depreciation and interest because they are purchasing the asset on the basis of installment. That is the reason. Now, for the operating lease, there won't be any depreciation or interest charged on a particular asset. It will not be applicable on the perspective of operating lease. Lease term. It covers most of the asset's life. Because it might be a building or land, they are purchasing that particular property. But if you take the operating lease, shorter than the asset's useful life. I have given a best example for your better understanding, that is lease of machinery with buy option. So we will make the payment on the basis of installment. Once our payment is done, the particular machinery will belong to the financial lease. Then for operating lease, I have given an example like renting an office, house or even car also will come under the category. Now, let's start with a disclosure for lessor. I hope you understand the term financial lease and operating lease because with that meaning only we are going to discuss the disclosures. First disclosure, financial lease disclosures. If an organization it can be any organizations, if they are deals with a financial lease, because if they are buying a machinery on the basis of installment. In that situation, what are the disclosures are mandatory? The first one is they need to mention lease receivables breakdown, because they have done an investment. On basis of installment, they will make some lump sum money. What is the gross investment money? Then what is the unearned financial income from the particular property need to be shown in the financial statement. Second one is selling the profit or loss. When an industry is decided to sell the machinery, through the financial lease, if they have received any profit or a loss, need to be recorded in the financial statement. And third one, even here they will be making a maturity analysis of lease payment. So they will make the lease liabilities, how much will be for less than 1 year, 1 to 5 years, and more than 5 years. These are the three disclosures from the perspective of lease, financial lease agreement. The second one is operating lease disclosure. The first one, lease income, because risk is not transferred. If any office is rented, from that, what is the income they have generated? It has to be shown. Second one, future minimum lease payments receivable. So they will record it, how much amount will be receiving it from the particular parties. And also it will be categorized into 3, less than 1 year, 1 to 5 years, and more than 5 years. The last, third point will be other disclosures. If there is any management policies have changed, or if there is any assumptions under the lease agreement with regard to that, they need to mention under the financial statement. And the last point is about the residual value guarantee. So the company will find out what is the residual value guarantee for the organization. So to summarize the topic what we have discussed today, we started with the meaning of lease agreement. We have seen the differences between the two parties, lessor and lessee. Then we started with a discussion of disclosures from the perspective of lessor and from the perspective of lessee. Thank you so much.